Calculation of net annual value, NAV. Apart from that, we have been given unrealized rent, vacancy allowance also, both. Market value, fair value, and standard rent. These three are very important for finding the expected rent. So, A, B, C, D, E, and finally F. Municipal value being 140, 120, 180. You can join with me to solve this. Come on. If you have already listened this lecture, you can solve along with me. Okay. Then fair rent 150, 130, 170, 170, 170, and 130. Between these two, whichever is higher will be taken. 150, 130, 180, 180, 170, and 130. Verify whether standard rent is applicable in that location. In that case, whichever is lower will be taken. Standard rent in this case being 118, 118, 150, 130, 152, 140. Between these two, whichever is lower, 118, 118, 150, 130, 152, 130 is the expected rate. Now you have to find out rent received. RR is nothing but rent received is equal to annual rent. If the property let out for the entire year without any disturbance, then what could be the rent? No, that is called annual rent. From that, you have to subtract the unrealized rent, where the unrealized rent should be deductible only if the conditions laid in rule number 4 is satisfied. And vacancy period rent also be deducted, which is called vacancy allowance. So annual rent being 144, annual rent being 144, unrealized rent being 12 rupees. Vacancy period also be 1 month. For that 1 month, the rent being 12 rupees. So from 140, 44, 12 and 12 will be subtracted. 120 will be the rent received. Okay. This value minus this value minus. This is unrealized rent. We assume rule number 4 is satisfied. Municipal tax paid by the owner 5%. It can be deductible from the GAV to arrive the NAV. Determine their net annual value. So 144 minus 12 minus 12, 120. 114 minus 28.5 and minus 14.25. What is the value? Come on, tell me. You have to subtract two values, 28.5 and 14.25. 71.25. Next, 4 and 60. 64 should be subtracted. 80. Then 72 dash and 16 and 16. Is that okay? Next step is all about you have to find out the value for rent received as well as vacancy allowance. These two put together, vacancy, rent. With that 120, you add this one. It means you have to subtract this one only. Unrealized rent only will be subtracted. 114 minus 12, 132. 71.25 with that 14.25 is added. 85.5. 80 with 60, 140. and 72 plus 36, 108. Vacant for the whole year unless you prove will not be claiming any deductions. Okay. If you are able to prove that you are not able to let out because of the old house or you don't get the tenant despite your genuine intention to let out, then okay, you don't need to pay any tax. 1/3, 16 plus 160, 176. Now GAV. For the GAV calculation, for the GAV is equal to rent received. What the actual rent you received will be considered as GAV, provided your rent received plus vacancy rent should be higher than the expected rent. Then it's a genuine case. Okay, if expected rent is lower than rent received plus vacancy allowance. Else, else expected rent will be your GAV. Expected rent will be your GAV. So I am cross verifying with these two numbers. So here, in this case, it's a genuine. Here, not genuine. Here, not genuine because RR and VR is less than ER, not genuine case. 108, not genuine case. 176, genuine case. Only these two cases genuine. In case of genuine, what you declare, we never bother. That declared value will be your income. What is your declared value? Rent received. Rent received will be the value. So here 118, 120, sorry, 120. Here 16. In rest of the cases, I never take or trust your value because you are undervalued. So I will take only the expected rent 180, 150, 130, here 152. But in this case, if you are able to prove that genuinely you are not able to get because the house is no more suitable for living, so old house dilapidated, at any time it may fall. Then in that case you can get escaped. So even though if you have 2 or 3 houses, okay, for letting out purpose but not let out remains vacant, can I enjoy the vacancy allowance? No, sir. If you have the house property, definitely it will be considered for the taxability. Only to the extent of 2 house properties can be allowed for your self-occupancy purpose. The rest of the cases, it will be considered as let out only, deemed to be let out. Okay. So we calculated the GAB. From that, you have to subtract what? Municipal tax. From the GAB, I have to subtract the municipal tax. Also, payment is made by the owner, can be subtracted in the same previous year. So, can be subtracted. Paid and by owner. These two conditions satisfied, so it can be subtracted. The rate being 5%. Come on, tell me. If the municipal tax is given in certain percentage, this will be calculated only on municipal value. Is that okay? For their own record, 140 will be the value. Based on that value, they will charge the municipal tax at the rate of 4 or 5%. So 5% on 140 being 7 rupees, for 120, 6 rupees, 9 rupees, 9 rupees, 8 rupees and 6 rupees. From the GAV, if I subtract the municipal tax, then the ultimate value being NAV. Ultimate value being NAV. This ultimate value being 113, 112, 141 and 121, 144 and 10 will be the NAV for the taxability. If it is clear, text me. Now we'll deal with the interest calculation. See here, we have completed the section 22. Then we have completed the section 23 class 1, determination of annual value if the property is let out. Annual value determination. So first you have to find out the estimated rental income. Right. The estimated rental income is nothing but the annual value is the estimated rent the property could fetch if it is let out yearly basis. For this, we have considered three rents. One is municipal value, fair rent, as well as standard rent. Based on the three, we can calculate the estimated rent. Actual rent being higher actual rent, lower actual rent due to vacancy. So we can adjust all these things also, right? So along with the vacancy, what to do? We have already explained. You no need to study this. Already explained here in short, along with the illustration. Municipal tax paid by the owner are deducted from the annual value. Unrealized rent can be deductible if the conditions laid in rule number 4 is satisfied. So municipal value, fair rent, between these two, whichever is higher will be the first calculation. And restricted to the standard rent, so whichever is lower is taken, that will be the expected rent. Sorry. Rent received. Rent received is nothing but annual rent minus unrealized rent and vacancy rent. Okay. And one more step here is find the value by adding the vacancy rent with the rent actually received. For calculating the GAV, cross verify the ER along with this value. If this value is higher, then it's a genuine case. Then what you say as your rent received will be your rent, final rent. If it is not so, we cannot rely about your disclosed income. So expected rent will be considered as GAV. So we have calculated the GAV. From there, municipal tax is calculated and subtracted, which is called NAV. Municipal tax can be subtracted on two conditions. It should be paid in the previous year. That too paid by the owner. In these two cases, you can subtract. Else, you cannot subtract. You got the NAV. From the NAV, only two things can be subtracted. One is a standard deduction of 30%. Another one is interest on loan borrowed for constructing or purchasing the house property. These two only deductible. Only these two. So if you find out the NAV, from there you straight away subtract 30%. A flat. No other deductions are eligible. No other deductions. Sir, gone for whitewash, recruited and persons to go for collecting the rent on behalf of me, take care of the other property management, and repairs and renovation we have done now and then, nothing can be deductible. So in short, 30% can be flat deductible. And interest, if any loan borrowed, that loan for that any interest is payable can be subtracted here. And finally, the value what you get is nothing but profit or loss from income from house property in case of let out property. Right. Municipal tax. Sir, if I have the residential house property outside India, what can I do? If you are being ROR or if you are being RNOR or non-resident, though the property is outside India, rent received in India, then it's taxable. In that case, whatever the municipal tax or whatever the local tax you pay in that country for that property can be subtracted. The same condition will be there. Payment should be there and by the owner. Deductible only paid by the owner, means deductions is available only on payment basis. And payment in advance cannot be deductible. Okay. If you are getting any refund, of course not taxable. Not taxable. So your gross annual value being 10,000 rupees. Okay. For the municipal tax, for the current previous year 24-25, 1,000 rupees, you thought to pay for 25-26 also this year itself 500 rupees. 1,500. How much can I deduct, sir? You can deduct only 1,000 rupees. 9,000 will be your NAV. Okay. Any amount you pay for the next year or advance, this is in advance, right? So it cannot be deductible. But you can claim these deductions in the next year, not in this current year. Clear? GAV being 10,000 rupees, municipal tax minus municipal tax for the year 2010 to 2024. You totally forgot to pay the municipal tax for more than 14 years. Per year, it comes around 1,000 rupees for the entire 14 years put together. The overall municipal tax payment being 14,000 done in this current previous year, paid in the previous year 24-25, as well as by the owner. What happens in this case that the entire 14,000 can be subtracted. Now your NAV being negative. Once there was a question, will there be any possibilities of that NAV being negative? Yeah, of course it's possible, right? So NAV is negative is also possible if the GAV is less than the municipal tax paid. That such scenario may also exist. Suppose GAV and municipal tax paid for the current year being 2,000 rupees. 8,000 will be your NAV. 8,000 will be your NAV. Is that clear? Suddenly, because of the agitation, state government waived this value. Okay, they said it's not 2,000 rupees, only 1,500 is enough. So remaining 500 is going to be refunded. Okay, so always know that may be the stand of most of the state governments. Okay, the moment they come for the ruling, immediately they'll raise the fund, tax and all, tariff, electricity tariff and property tax, everything is raised. Then there will be lots of public agitation. Then immediately we, in hearing the public's interest, we want to reduce the tariff. Actually, the tariff increased from 1,000 to 2,000. Thereafter, in hearing, they will reduce to 1,500 to satisfy. So they will reduce 500 rupees and refunded this 500 rupees. What happens to this refund amounts of 500? That is not taxable. Once you calculate the NAV being 8,000 rupees, you pay the tax only the 8,000 rupees. Is that okay? Any refund will not be considered for the taxation purpose here. Is that clear? This is all about for the municipal tax payment and deductions in that. So India and abroad, the tax paid for the property can be deductible, whether it's in India or outside India, it doesn't matter. Now, usually rental income, will be calculated based on the notional income, not the real income, instead of real income. Real income is not there. You cannot argue with the government, income tax department, sir, I didn't receive even single penny for the rental, for the letting out of this property, sir. You cannot argue, because based on the estimation only we have to calculate. Okay, municipal value, fair value, rental value, means standard rent. Based on that, we will calculate estimated rent. If we say that, sir, I have not let out that for the year at all, remains vacant for the entire 12 months, sir. Okay, I thought to let out, but I don't want. Whenever I'm in need, I can use. No, you cannot escape. Okay, if the actual rent being 0, yet the estimated rent will be your GAV. For that, you have to pay the tax. Some students may ask the question, sir, what happens in case of lease? A lump sum payment, 5 lakhs or 10 lakhs may be given. They will now occupy. 5 years later, they vacate by getting the 5 lakhs or 10 lakhs rupees in return. So the amount what they have deposited in the very beginning, will be called as what? Lease amount. Only the interest component is considered as the rental value. Is that clear? Interest component will be considered as rental value. So then what about the revenue for the person who let out? Sir, he is not getting any revenue. No. Whether he gets it or not, already told you it's a notional income. You have to calculate the estimated rent, and for that you have to pay the tax. Okay. Self-occupied houses, more than 2 houses. So if you have 4 houses, all the 4 houses are used for your own residential purpose only. Okay. So as you are using more than 2 house properties, only 2 house properties will be considered as residential house properties, self-occupied. The treatment for that is totally different. Remaining 2 will be considered as let out. Consider as let out. Sir, I have not let out. No problem. It is considered as deemed to be let out. If it is deemed to be let out, what could be the value? Sir, I didn't receive anything. No need to worry about that. So expected rent will be your GAV. Is that okay? In that case, expected rent will be the GAV. Okay. In case let out for throughout the year, in case let out for the throughout the year, in that case, if the expected rent is higher than the actual rent receivable, The actual rent may be only 10,000 per year, but the expected rent is 15,000. Between these two, whichever is higher will be taken. No. So if you are disclosing that the actual rent is very lesser, no, I will not take. I will take only the expected rent. Real rent is not a matter. So I will take only ER is equal to GAV. Right. In case of the let out property remains vacant, what happens, sir? It remains vacant throughout the 12 months. In that case also, GR is equal to GAV. Okay. So provided expected rent is higher than the actual rent receivable, the same condition will be applicable. In case house property is held as a stock in trade, sir, what can we do, sir? If you are keeping the house property as a stock in trade, up to 2 years, okay. Beyond the 2 years, it will be considered as let out and expected rent will be out GAV. If I am being the real estate owner, so I am constructing the flats, builder. I constructed around 100 flats and I promote the places and sell the flats. So I constructed 100 flats and out of 100 flats, I sold 50 flats. Another 30 flats already booked may be transferable. Remaining 20 flats, remains unused. This is booked already. This 30 is sold within 2 years, 1 to 2 years after the construction. This 20 remains unsold even after 2 years. Even after 2 years. Is that okay? For him, that flats being the stock in trade. Okay. So I am purchasing the books and selling. Then the books will be my stock. Stock is nothing but buying and selling for your profit. Similarly, I am purchasing the flats or constructing the flats and selling. Manufacturing anything and selling is a stock. Similarly, rather than manufacturing, I am constructing and selling. The construction and the converted flats will be my stock in trade. Okay. By selling the flats, I will get the profit. That's my business income. But if the flats remains unsold for 2 years, more than 2 years, automatically that will be considered as deemed to be let out. You have to pay the tax on the income. Is that okay? So more than 2 years, then expected rent will be the GAV. For these 20 flats, find out the expected rent. That will be your income from house property. See the trouble they face. Builders will face the trouble. Is that okay? So what happens? 2 years if remains unsold, they have to let it out anyhow. At least they will get the income. But if they let out, what happens? The problem. The house is not fresh and new. It seems to be used one. Then the value may be totally different. So they don't want to let it out. That's a problem they face in case of real estate builders. Is that clear? So actual rent will not be taken in some of the cases. We usually calculate based on the notional rent. That's why the taxable value will be not the real one. It's a notional one. Already we have studied, right? Income being the annual value, not the actual rate. Very first class we have studied. Now, in this class, I am going to guide you about the interest. So, you calculated the NAV, right? So, you learned already the calculation of NAV. From that, you can subtract only two things. One is standard deduction under section 24, class A. As per the standard deduction, 30% on NAV can be subtracted. 30% of NAV. Not only that, you can subtract the interest also. After subtracting the value, what you get is called income from house property. Income from house property. Is that clear? Income from house property. Now, how can we calculate the interest, sir? How can we calculate the interest? Interest can be calculated, classified into two varieties of interest. One is pre-acquisition or construction interest. Pre-acquisition or construction interest. Another one is post-construction period interest. Post-acquisition or construction period interest. Clear? If you find out the pre-construction period interest, that can be deductible over 5 years once the construction is over. So if you want to construct the building, what happens? It may take around 3 or 4 years also. You borrowed and you started constructing. For the borrowings, you are paying the interest, right? The construction not completed. As construction not completed, the interest what you supposed to pay during the period of construction has no power to recover. If there is any income, of course you can recover. So what happens? If you are spending any money or any expenses you are incurring during your studies, what will you do? You will demand to your parents. Is that okay? Fees and to and fro, snacks and lunch, whatever it may be, you demand, and recreation. Once you get the job and thereafter if you plan to study CA, what happens then? CA, CMA. If you demand your parents, you now capable of earning the money, so spend hereafter. Relieve me to spend hereafter for you, right? That's how the statement is there, right? Same happens here also. Building still under construction, it's not generating any income. As the building is not capable of generating any income, for the borrowings, the interest is the expenses payable. No, all these expenses grouped, accumulated. Once the building is completed, now it is capable of generating income by letting it out. So thereafter, whatever the interest you pay can be deductible directly from the income generated by letting out. So pre-acquisition profit period interest, no, there is no any income. So accumulate that. Once the business means the building is constructed, after that it can be amortized toward the 5 years period. It's not single shot, 5 years period. Is that okay? In 5 years you can amortize. Clear? So this one and this one both put together you can subtract. For example, pre-construction period interest being 1 lakh, post construction period interest being 30,000 rupees. Okay. See here, your NAV being 1 lakh, 2 lakhs. Section 24 class A, what is that? Standard deduction. How much is that? 30% on this, 60,000 rupees. Apart from that, B is all about what? Interest. How much interest can be deductible? You have to find out the pre-construction period interest and post-construction period interest. In case of pre-construction period interest, it can be amortized over 5 years period. Every year 20,000 rupees. Post-construction period interest, you can directly subtract 30 plus 20, 50,000 rupees. So 50,000 rupees can be deductible. From 2 lakhs, you can subtract these two value. Balance 90,000 rupees is considered as income from house property. Is that clear? Now, what is called pre-construction period? What is called post-construction period? Now, our duty is to learn the pre-construction period as well as post-construction period. If it is clear, text me so that we'll move on to the next one. Clear? Now, in case of pre-construction period, okay, starting date, whichever is later of, starting date being whichever is later of, commencement of construction date, isn't it? Pre-construction means before completion of construction, but after starting, from the starting date to ending date. Clear? Construction starting date to ending date. But construction started on 1st July 2021. This is what about the commencement of construction. But actual borrowing being 1/12/2021. Borrowing. Now, what could be the starting period for the pre-construction period? Can you guess? If you take 1/7/21, of course, construction started by the time, but there is no borrowing, there is no any interest. Interest payment starts only from which date? This date. Is that okay? So, the pre-construction period starts whichever is later of commencement of construction or date of borrowing. Why is that? It is whichever is later. What happens in this scenario? 1/7/2021 is nothing but commencement of construction. Borrowing date being 1/1/2021. So in this case, what is the starting date, sir? Though you started paying the interest from 1/1/2021, but construction not started. So from this date to this date, you're unwantedly keeping the money idly. It's your fault. So we'll start calculating the pre-construction period only from 1/7/21. So between these two, whichever is later 1/7/21, in this case 1/12/21 will be the starting time. So what is the starting date for the pre-construction period? Two dates are there. One is a real construction starting date, another one is borrowing date. Between these two, the later date will be the pre-construction period starting date. Is that okay? Let's see here. Commencement of construction, second part is all about date of borrowing. Date of borrowing. Clear? And what about the ending date, sir? Ending date. Ending date is also whichever is earlier of. What's that? Maybe date of completion of construction. Date of completion of construction. The date of completion of construction being 1/7/2024. This is what about the date of completion of construction. Completion. So automatically that will be the end date. But borrowing remains unsettled even after that date. Probably the borrowing is settled on 1/1/2030. Repayment happened. So if the borrowing remains pending even after the completion of construction, that period is called as what? Post-construction period interest. So with that it gets over. It gets over. Is that clear? But what happens if the repayment happens on 1/1/24? Though the construction gets completed by this date, but repayment had completed much ahead of the time. So in this period, you don't pay the interest. So in this case, 1/1/2024 will be the final date. 1/1/24 will be the final date. In case of end, whichever is earlier will be taken. In case of starting, whichever is later will be taken. But one extra point to be noted. What is the date of completion of construction? If I ask you 1/7/2024 means, the date will be considered as 31st March 2024. Earliest 31st March 2024 for the completion of construction of any property in any of the previous year. Otherwise, the day one of the previous year will be taken. If the completion happens on 1/7/2024, automatically pre-construction period ends on 31st March 2024. Otherwise, end of the last previous year. End of the last previous year. So you have to compare this date as well as repayment date between these two, whichever is earlier will be taken. Is that okay? So here step number 1, earliest 31st March from the date of completion. Second point being date of repayment. Date of repayment. So this is most important to determine what is the pre-construction period. Pre-construction period starting and ending date you have to find out. Now find out the interest payable for this period that can be amortized over 5 years period. Amortized over 5 years period. Is that clear? Even after this date, after the end of this date, if the loan remains unpaid, that will be post-construction period. There is no any confusion for the post-construction period. If the loan remains unpaid after this end date, that will be called a post-construction period interest. If the repayment happened before the end, of course, there is no post-construction period. So from the end date until repayment, year on year, you can claim the deductions as a post-construction period interest until the entire loan is repaid. In case of home loan, no. The tenure is very high, maybe 15 years and 20 years. But anyhow, the pre-construction period interest can be amortized to only a matter of 5 years. The year in which you constructed, your construction is completed. From there, another 4 years you can claim. But post-construction period, until you repay, you can claim year after year. Year after year. Is that clear? Now, deductible interest under section 24 clause B. Find out the pre-acquisition period interest. 1/5 will be deductible. What is that? Loan amount borrowed multiplied with the pre-acquisition period. What is the pre-acquisition period? This one will be the pre-acquisition period. Pre-acquisition period is nothing but starting date for the pre-construction period from that date to ending date of the pre-construction period. That will be the pre-construction period. Probably it may be 2 years or 2.5 years, whatever it may be. That will be this one. And multiplied with the rate of interest. This is what about the overall interest for the pre-construction period amortized to over 5 years. So divided by 5. And in case of post-construction period, the loan amount multiplied with the period of loan remains unpaid in the previous year. If the loan unpaid for the entire year, you have to take 1 year. But in this current previous year, within a matter of 7 months, you have paid the entire loan, then 7 months will be taken. into rate of interest. This is what about the post acquisition interest. So you add up these two, this can be deductible. Fully deductible for let out. For let out. Clear? So I have given this one pre-acquisition or pre-construction period. Starting date being whichever is later of date of borrowing or date of commencement of construction. Between these two, later date will be taken. Ending date being whichever is earlier of date of repayment of loan or earliest 31st March. Between these two, whichever is earlier will be taken. The difference between these two, you know, so 1, 2 minus 1, this is called pre-acquisition period. For that pre-acquisition period, you have to find out the interest rate. Is that clear? To master this, we'll now discuss the illustration. One comprehensive illustration is enough for mastering this particular concept. Okay. Shall I move on to that? Come on, if you want to make a note of it, you can make a note of it. Else, we'll directly go for the illustration. Once it is over, come on, text me. Clear? The only part where you need to be careful in case of income house property is this one, interest calculation. Right. So I will explain all these things in detail. Most of the cases in your examination, such a detailed illustration I have not expected. Okay. Currently, those things are very rare. But anyhow, improve your understanding limit. Right. Let's now solve this illustration. Yeah. Mr. Nadraj started construction of a house on 15th July 2021. He borrowed rupees 2 lakhs on 1st January 2022. Okay. So this is what about the commencement of construction. This is what about the date of borrowing. The rate of interest being 15% per annum. The house completed on 30th November 2024 and let out thereafter. Immediately after completion of the construction, it was let out. Compute the amount of deductions of interest in the following cases. The whole loan is outstanding till 31st March 2025. Whole loan is outstanding. Okay. First scenario. We'll now find out the pre-construction period. Pre-construction period. Starting date being whichever is later of, number 1 being commencement of construction, number 2 being date of borrowing. Okay. Commencement of construction being 15th July 21, scenario 1, and date of borrowing being 1st January 22, and ending date being whichever is earlier of, number 1 being earliest, okay, earliest 31st, okay, 31st March from the date of construction, completion of construction. From the date of completion of construction, 30th November. If the date of completion of construction 30th November means earliest, because in that year itself it starts generating income. After 30th November, it starts generating income. So, any interest for that period can be adjustable in that income. That's why the Pre-construction period ends on which date? 30th, before the 30th, 31st March of this particular previous year. Okay. So here this is 31st March 24. And the loan remains pending. What about the repayment of loan? Repayment is not done. Repayment is not done. Clear? Now, find out the pre-construction period. Find out the pre-construction period. Between these two, whichever is lower being, whichever is later being this one. And here, whichever is earlier being this one. Now, find out the pre-construction period. Pre-construction period. (22, 23, 24), 2 years and 3 months. 2 years and 3 months. Isn't it? 2 years and 3 months. Yes. Come on. Find out the pre-construction period interest. Interest. Pre-construction period. How much interest of pre-construction period can be adjusted? The loan amount being 2 lakhs. Rate of interest being 15%. And then 2.3 years, 2.25 years, right? 2.25 years. Can be amortized over how many years? 5 years. So, I divide this by 5. Come on, tell me the value here. 13,500. This 13,500 is adjusted in this year. Apart from that, another 4 years you can adjust 13,500 year after year. Post construction period interest. 2 lakhs is the loan. In this year, there is no repayment. Means this 2 lakhs remains outstanding for the entire 12 months. So now you have to calculate the interest for the entire 12 months, 15%. This value being 30,000 rupees. Overall interest deductions claimable in this case being 43,500. 43,500. Is that clear? Clear? Let's go for the second scenario. If the entire loan has been refunded on 31st December 24. Okay. Now what happens here? Commencement being 15/7/21, 1/1/22. This one is also the same 31/3/24. But repayment of loan happens on which date? 31st December 24. Is that clear? Now what about the pre-construction period? Between these two, whichever is later being 1/1/22. Between these two, whichever is earlier being this one. So 2.25 years. 2.25 years. There is no any change. It remains the same 13,500. But post-construction period, after the end of the pre-construction period, until the repayment, you can consider. So post-construction period interest here being, the loan being 2 lakhs, rate of interest being 15%. After the end of the pre-construction period, that is 31/3/24, how long you have the amount to be repaid? In the current previous year itself it is paid. So it is paid in the current previous year itself means how many months you paid interest in the current month from the end of the pre-acquisition period. From here to here, 9 months. So you have to calculate the interest for the 9 months. Come on. 22,500. Okay. 22,500. The amount deductible in this case being 36,000. Clear? What about the next year, sir? Next year you don't have what? Pre-construction period. You don't understand this. This one or this one? This one. This one. Okay, okay. Welcome. Is that clear? 36,000. What about the next year? In the next year, again, you can claim only the pre-acquisition period interest, 13,500 for 4 years. Because repayment is over, you don't need to claim hereafter. Okay. Clear? See, in the third scenario, no. Out of 2 lakhs loan, refund happened 50,000 on which date? 31/12/23. 50,000 refunded. Another 50,000 refunded on 31/12/24. Another 1 lakh status is not available, means pending. Pending for the entire year. How can we solve this, sir? So you need to consider this being 3 illustrations like that. So repeat the same for all the 3. Okay. Now for this first one, third option where the payment is made on 31/12/23. This is first option. Third, another part settled on 3/12/24. Third illustration, not paid at all, pending. These 3 options. I have to work out all these things separately. Starting date, there is no any difference. That remains 1/1/22, 15/7/21. Ending date, construction completion, there is no any doubt. Repayment date for the first scenario being 31/12/23. Clear? For the 50,000 rupees. Between these two, whichever is later being this one, between these two, whichever is earlier being this one. From the starting to end, how many days are there? 22, 23, 22 full year, 23 full year, only 2 years. Only 2 years. Now calculate interest for 2 years on that pending amount 50,000 only into 15/100 for how many years? 2 years. And this can be amortized over 5 years, isn't it? 1/5. How much is that? Pre-construction period interest. 3,000. Is that clear? 3,000. What about the post-construction period, sir? In case of post-construction, it is 0. In case of post-construction, it's 0 because already paid. 31st December itself paid. We completed the construction on 31st March 24. We are running 24/25 previous year. In the current previous year 24/25, we have not paid even single penny as interest because already the loan is settled. Second scenario, starting date, of course, there is no any problem. 15/7/21, ending date being 1/1/22. And ending date being construction completion. Prior to that, the 31st March 24 will be the date. Repayment happen on 31st December, right? 31st December 24. Now here, this date will be the starting date. Between these two, whichever is later. Between these two, whichever is earlier date will be taken. From here to here, we have 2.25 years. And this will be the post-construction period. So we have the pre-construction and post-construction both. For the pre-construction period, 2.25 years and the loan amount being 50,000 and rate of interest applicable in this case being 15%. Of course, you can claim this over 5 years, so divide this by 5. So the ultimate value being 3,750 being the pre-construction period interest. Apart from that, the post-construction period interest being also applicable for how many months? 9 months. From the end of pre-construction period up to the date of repayment in that current previous year, we have 9 months. For the 9 months, you have to calculate. So 50,000 rupees into 0.75 years into 15 percentage. How much is that? How much is that? Hmm? Oh, 3,375. Okay. 3,375. Yes. Come on, tell me this value. 5,625. 5,625. The last case, starting there is no problem. 1,521, 1,122. And earliest 31st March from the date of completion being 31st March 24. The date of completion being 30th November. Before that, the 31st March being 31st March 24. Repayment still pending, not at all paid. So it's not applicable. Now here, between these two, whichever is later is this one. Between these two, whichever is earlier is this one. And the duration for pre-construction period being 2.25 here. 2.25 here. Now, interest in this case being 6,750, I think. Am I right? This is for 50,000. This is for 1 lakh. This value is just 2 times of this one. So I just multiplied with the 2. Clear. And post-construction period interest, entire 1 lakh at the rate of 15% will be calculated. The entire 1 year remains pending. So 1 year's interest being 15,000 rupees. Now overall pre-construction period interest for the year under third option being, add up the 3,000, 3,375 and 6,750. What's the total value? 15,000, 13,125. What about the post-construction period interest? 0, 5,625, 15,000. What is the value? 20,625. The overall amount deductible under section 24 class B being 33,750 is claimable value. Is that clear? Is that clear? That's all. Make a note of it. Now remember, this value will be deductible for in and further 4 more years. Here this value will be deductible for further 4 more years. Here this 13,125 will be deductible for further 4 more years. The post-construction period interest will be deductible only until the repayment is over. Once the repayment is over, there will not be any post-construction period interest. Come on, make a note of it. Now, vacancy allowance related illustration. Mr. Pradeep completed construction of a residential house on 1/4/24. Interest paid on loans borrowed for the purpose of construction during the 2 years prior to the completion being 40,000 rupees. Then this is nothing but pre-construction period interest. The house was let out on a monthly rent of rupees 4,000. Annual corporation tax paid being 2,000. Interest paid during the period. During the period means it's a post-construction period interest. So usually calculation part is pretty rare for the examination purpose. But anyhow, you just try to understand the calculation part also. Okay. Amount spent for repairs 2,000. No other expenses can be deductible. Only a flat 30% on the NAV can be deductible. Fire insurance premium also not eligible. Property was vacant for 3 months. So vacancy allowance is there. You can adjust this. Annual letting value as per the corporation records. This is nothing but municipal value. Compute the income under the head income from house property. Okay, this corporation tax is nothing but municipal tax. So we have been given all the information. So your expected rent in this case is equal to municipal value only. We don't have the fair rent or standard rent. In absence of these things, you can take the municipal value as your expected rent. Okay. And then rent received. Rent received. The house was let out on a monthly rent of 4,000 rupees. 3 months being vacant. So rent received being annual rent minus vacancy allowance minus unrealized rent. Is that okay? But anyhow, we don't have the unrealized rent concept here. So only AR minus VA. Annual rent being 4,000 rupees into 12 months, where 3 months remains vacant. Otherwise, 3,000 into 2. 3. Otherwise, 9 into 4,000 rupees. Sorry, 4,000 into 3. Okay. 4,000 into 9 months only recovered. 36,000 is the rent received. Next, don't forget to find out this value. Rent received plus vacancy, rent both put together. 48,000 rupees. 48,000 rupees. Is that okay? 4,000 per month for the 12 months. If it is let out, then the value being 48,000 rupees. Now you have to find out the GAV. Okay. GAV in this case being rent actually received 36,000. Why? As expected rent is less than or equivalent to rent received plus vacancy rent. If the expected rent is lower, the rent received plus vacancy rent is higher than the expected rent, then the income you you have shown being genuine case, genuine one. So I never bother to take the RR. So I'll just take the RR here. Okay, RR. GAB is done. From the GAB, I can subtract the municipal tax. The municipal tax in this case being 2,000 rupees. Okay, after subtracting municipal tax, the value what I get is NAV. From the NAV, 34,000, you can subtract two items. One is all about standard deduction, the section 24 class A. Standard deduction, SD, which is 30% on NAV. 30% on NAV. 10,200. Apart from that, B, interest. In case of interest, pre-construction period interest, no, you can deduct over the 5 years period. 40 for 5 years means every year you can claim 8,000 rupees deduction, and post-construction period interest you can claim as it is. Okay. So 40,000 by 5 pre-construction, post-construction being 16. So overall value being 24,000. 24,000. 10,000 to 200. Okay, 10,200. So you can subtract these two values from 34,000 to find out the income from house property here. Hope you will be getting negative value, loss, profit or loss, loss being negative. Now, let's move on to the next one. We have completed section 23 class 1 NAV calculation, annual value calculation for the let out property. Now, in case if the house property is for self occupancy purpose, okay, self occupancy purpose, that too residential. Self occupancy purpose for commercial will not be considered here. Is that okay? Let out for commercial or residential purpose, We have already completed. For both, the calculation is the same. But if the self-occupied property is for the residential purpose, then how can we calculate? Very simple. NAV is equal to 0. Directly you can take the NAV being 0. Only one item is going to be subtracted. From the 0, if you are subtracting the item, what happens? Always it's a loss. That loss can be adjusted in any other income to reduce your income for the tax purpose. So you are pretty happy that. So if you are claiming the loss by debiting to any other income, adjusting any other income, your tax rate will be, tax amount will be decreasing. It's a favor for you, right? So from the NAV, you can claim only one thing, interest. Interest, pre-acquisition as well as post-acquisition, provided there's a ceiling, maximum 30,000 rupees or 2 lakhs, as the case may be, you can subtract at the maximum. So you will be getting always income from house property being loss only, From the 0, if you are subtracting the interest, you will get the loss only, right? That too, this will be eligible only in case of shifting out of the default tax regime. Under default tax regime 115 BAC, you are not eligible for this one also. Just to forget about this one. In case of default tax, shifting out of the default tax regime, this one will be working. Else it's totally waste. It will not come at all. Okay. So they are making the tax very simple in the coming days, so that even a layman can handle everything he himself, right? So you have to be careful. You have to be master with the other things to sustain your employment or your job. Deduction for interest on loan for self-occupied property, maximum deduction being either 2 lakhs or 30,000 rupees. In case of self-occupied properties available for excising, opting out of the default tax regime. If you are going for the default tax regime, this is not available. What is the 30 and 2 lakhs, sir? To claim the higher deduction 2 lakhs, the loan should be borrowed for either acquisition or construction of house property, okay, on or after 1/4/1999. On or after 1/4/1999. It seems to be redundant hereafter, so almost 25 years already over. Okay, so the housing loan itself maximum 10 years or 20 years. So it's more than 25 years. Anyhow, this becomes useless. So all these things are now going to be scrapped. All these things what you study, you have to forget as soon as possible after the exam, right? 1/4/1989. 2 lakhs. Condition. So you need to borrow only after 1/4/1999, on or after 1/4/1999. Apart from that, complete the construction. In case of construction, complete that within 5 years. Within 5 years. Okay. From the end of financial year in which the loan borrowed. So the loan borrowed means from that year onwards, within 5 years, you have to complete. And you have to get a certificate for paying the interest. That interest is for loan borrowed for acquisition purpose. Okay, you may borrow the loan by taking the jewel loan and personal loan. Using the loan, you constructed the house property. Can it claim the deductions? No, you are not eligible for claiming, because you are not linked to the loan is for the house property. You need to borrow the loan only for what purpose? Housing purpose. Only for housing purpose. If you are borrowing, then you can claim. Otherwise, you cannot claim. Okay. If these conditions satisfied, you can go for the higher deductions of 2 lakhs. Else, it's only 30,000 rupees. So newly constructed house property or purchased one, and construction should be completed within 5 years. Not for the renovation. In case of renovation or loan borrowed before 31st March 1999, the limit is only 30,000. For repair and reconstruction or loan borrowed before this date. Before this date means on or before 31st March 1999. Is that okay? This value being 30,000 rupees. How many house properties you can occupy for your self purpose means 2 house properties you can hold. You can hold 2 house properties for your self occupancy purpose, but both the value put together, the maximum deduction is only 2 lakhs, not beyond that. So, residential house property number 1, maximum interest can be 2 lakhs. Residential house property number 2, for that also you can claim 2 lakhs. But collectively, the maximum amount you can claim is only 2 lakhs. Is that clear? The maximum ceiling is also 2 lakhs. Let's see. Section 23, clause 2. Annual value calculation for self-occupied property. Annual value for self-occupied property being nil. So, NAV being nil. From that, you can claim only the interest. Either it may be 30,000 or 200,000. So, from this, it is very clear income from house property should always be loss only. Loss only. Okay. Loss only. Is that clear? To claim this, some conditions are there. What are the conditions? Number one being self-occupation. He should occupy the property for his own residential purpose, not for the business purpose. The property must be occupied by the owner or his family for their own residence, not for the commercial purpose. Condition number one. It's very simple. And you are not able to occupy due to the employment or business. Okay, it remains vacant for the entire 12 months. Will it be considered as occupied for self-occupancy? Yeah, of course, it can be considered as residential purpose. Okay. If the owner is unable to occupy the property due to the employment or business or professional reasons, and they are residing elsewhere in a rented accommodation, the annual value is nil. Okay. So, very famous case happened some years ago in this regard. Right. So, in Chennai, no, you assume. In Chennai, no. Okay. So, house property is there for Mr. X. Mr. X being the High Court judge. High Court judge. And he was given a quarters by the government nearby. He resides here only. This house property remains vacant for the entire 12 months. As per the general rule, either you need to occupy or you have to treat this being the let out only. Immediately, Income Tax Department send a notice to the judge to pay the tax on this house property. Okay, any issue, then it comes only in the court, right? Who is he? Judge. He himself now calls for the discussion in the court, and it went to the court for the discussion. Okay. He says that I'm able to stay here, but because of my job, I give the judgment for various notorious criminals. If I stay in my home, I may have safety concern. They may come and kill me because of my judgment. I need to live only in the quarters given by the government with the police protections and all. Because of my employment only, I am staying here. I don't get any revenue. How can you tax me? So because of that reason, again, the judgment came in favor of the judges. Or a friend has given the judge for his another friend, right? Okay, this is a case here. So that will be then applicable for all the cases. If the owner is unable to occupy the property due to employment or business or professional reasons, and they are residing elsewhere in rented accommodation because of the professional reasons, sir, I cannot stay here. Okay, then you are excused. In that case, that house property is considered as what? Self-occupied only. So here NAV being 0. Else, expected rent will be the NAV. Okay, GAV, and from there municipal tax can be subtracted and you have to pay the tax. But he demands, sir, I cannot live there because of some other reasons. Okay, excused. And one more condition. This house property remains vacant for the entire 12 months. No benefit derived. No benefit such rent or other monetary gain should be derived from the property. He should not get any benefit. Stating this, he enjoys some benefit means it's illegal. You understand? So I could not live because of my professions or business, some other reasons. Right. Now, owner occupied property in other capacity. This will be always taxable. What is that? This is also one of the interesting case. Okay. Employer and employee. Okay. Employee renders service to the employer. Okay. Serves to the employer. Employer offers him what? Salary. Apart from that, employee demands, sir, all the employees are getting the rent-free accommodation. Give me rent-free accommodation. Give me, it's a genuine right. But the situation is, this employee already has a rental house, his own property. This employee already has own property, own residential house property. Where? The place where he is working. It is in Trichy. The employer also in Trichy, employees also in Trichy. Employee has the residential house property in Trichy. And he demands to the employer, sir, for all others coming from North India, getting the residential house property here. Give me that facility. Now, already you have the house property. Then why? Sir, I need residential house property. Okay. We don't have any quarters. Do one thing. You let out this to employer. This house property is let out to whom? Employer. And then employer in return gives this as a rent-free accommodation to same employee. So this house property of employee given to the employer for rental, let out to employer for a monthly rent of 25,000 rupees. And the same house property is now given to employee to stay. He enjoys staying his own property, getting the salary. Right. So in this case, what happens? He is now occupying here, not being owner of the house property, but employee of this employer. So he is occupying as not being as a owner, but he is occupying some other capacity. Some other capacity means being the employee of that employer. He is occupying that. He is not being the owner hereafter. So when the owner uses their property for a purpose other than the owner, okay, other than owner, he occupies not being the owner capacity, renting their house to their employer while residing in it as a rent-free accommodation. Then for this employee, for this house property, no GAV and NAV will be calculated. This will be taxable under what head? Income from house property. Is that okay? That 25,000 will be taxable under income from house property. Clear? So the calculation of income from house property in this case being NAV, from there interest is deductible, but limit is there 30 or 22 lakhs at the maximum. So income from house property will always be loss. So the next case being deemed to be let out and all.